Today, our very special guest is Grigorii Thrubkin, who is from 1802 Ventures, and they're also running a Hypernova Fund. I'm very, very excited to introduce you to our very special guest, Mr. Grigorii. How are you, Grigorii?
All good, Fahad. Thanks for asking. Yeah, how are you doing?
I'm great. I'm great. Thanks for coming on our podcast show. So let's begin with the question: who is Grigorii?
Well, that's a complicated question, though it seems simple. Yeah, I'm basically
Of course.
starting from 2009, I would say I would call myself an investor. And I was investing in various stuff, starting from, like stock market, futures, options. But now it end up that my full-time job is to trying to find, like exceptional founders and invest money, like in a kind of a building future we all want to live in. So yeah, I'm a VC investor right now.
Wow, that's amazing. That's amazing. Can you tell us a bit about your journey in the world of startup investing? What motivated you to get involved in this field?
Sure. So my journey, let's say, it started with the regular stock market. Yeah. So initially, I was trading well-known stocks like Apple, Google, Amazon, whatever you name it. And later on, I started interested, like, yeah, what's happening before, and so I started to look at pre-IPOs firstly, then like mid-stage startups, and it ended up that now we're investing at stages starting from basically seed up to, let's say, uh, after Series A, maximum Series B.
Okay, great, great. What is 1802 Ventures?
18 Ventures, it's basically company. It was opened like not long ago. It was set up not long ago in 2024 before it called Mindrock Capital. And basically 1802 Ventures, so it's inherited all the investments we did in our previous company. And now in 1802 Ventures, namely in Hypernova Fund, I would say. So we're focused mostly on space tech startups and anything related to, like deep tech and technologies which would help humanity to stay longer on the orbit and outside the orbit. So basically, above Kármán's line, yeah, which is known as border between space and Earth.
Okay.
Yeah.
May I know what's the fund size and how much you have it deployed already?
So the fund size, so for Hypernova, in fund size is going to be like 50 million. And we just started fundraising for this fund. Before we deployed around 250 million for the last basically 4 years. So, I mean, like we're not huge, not small. So just do our job, let's say. Yeah. Yeah, I just wanted to say that initially we were investing in like let's say industry agnostic, and we were just looking for opportunities, and it was companies from fintech industry, from, let's say, also diamond industry, so artificial diamonds. Also, we invested in them. Space tech. So it took maybe like 10 to 15% of our portfolio. But now we mostly focused on, yeah, like I said, deep tech and space tech. So only this.
It was my next question. What industries or sectors do you focus on when investing in startups? So is there some particular reason of your focus into space tech?
Well, except it was my passion, like from since I was a kid, basically. So I was reading, like all these colorful books with paintings of universe, stars, all this stuff. Um, I honestly believe that this industry is one of the best industries you want to invest in if you want to find potential monopoly. And that's what I bet every VC is looking for. The reason for this is, like you have like initial filter. So in the sense that every uh, startup which doing something in space tech, so they basically need to go through, like some grants competition, some, like let's say kind of filters from DoD, NASA, all the stuff. And once they received some, like funding from them, uh, they're good to go to find some private investments also. So and if they succeed, if we're talking about an upstream startups, so there is a really good chance that you could invest in, you know, in a in, let's say, Apple for space tech, or like another SpaceX. Yeah. So that's why we're focused mostly on space tech right now. So it's a very right timing.
Mhm. Yeah, amazing. That's, of course, the right timing. I see you have already invested in big names like SpaceX, Klarna, Consensys, Discord, Kraken, Udemy, Coursera. So they are already very big names. This was your previous fund, which has invested in these
Yeah.
startups. Can you please tell me a little bit about SpaceX or Klarna or Discord, Consensys, how you I mean, invested in those, and what
Yeah,
was your
not all of these
experience?
names were direct. So in some of them we are direct on cap table, and some of them we used, like some other fund structures. But mainly, well, obviously, that 2023 and 24 were a very difficult time for all VC space. All valuations plunged, and so now it's started to recovery slowly. Basically, we saw that those
Yeah.
startups which had, like substantial revenue, so they were hurt in some sense most, because valuations of names like Discord or Consensus, they get down like by 50, 60, even 80% sometime. But now things getting better, and I wouldn't.
Of course, because of the block Bitcoin cycle.
Also because of Bitcoin cycle, yes, but mostly because of everyone is expecting, like decrease in rates. Um, of course, everyone is afraid of potential, like inflation
Mhm.
spike. But yeah, we just need to start,
Yeah.
like heating up the economy again. And so what we see right now is that market is
Yeah.
recovering, and also it is a good time to, like pick up all the uh, names which, like dropped in valuation, because inevitably, if the company survived during 23, 24, so they had really good chance to recover and go IPO like next year, maybe next 6 to 18 months.
Especially, I mean, there was also like due to the higher interest rates, let's say you have already invested in Klarna, the buy now, pay
Hmm.
later startup based in Sweden. They were like, because of the high credit rate, interest rate, it was not so viable business model. So now the interest rates are cutting, just continuing your
Hmm.
talk. Klarna maybe is a very good choice now. So, and SpaceX, have you invested in SpaceX
No, no, no,
directly?
no. We were not direct there. So it was through a fund.
Okay, okay. Which one was the direct ones?
Yeah. So regarding Klarna and all the BNPL services, so for
Yeah.
sure, so once the interest rates will go down, so we're gonna see, like it's like strong bounce back in valuation of these companies. So in our opinion, Klarna is like, it's like no hesitation is a buy. It's just a question how fast will Fed move,
Hmm.
but we'll see. Yeah. So we basically direct in many names. So let's say,
Mhm.
I don't know, like Q Control, it's like Axiom Space, Public.com, in Kraken also. So we invested in them, it's like many times. in 2020, in 2021. Uh, Data miner also. It's like many others. So we were not direct in some, had to get in names. Um, yeah, uh, but the rest we prefer to do direct if there is such an opportunity. Yeah, but sometimes it's just like with the names like XAI, for example, or uh, some other companies like let's say Neuralink. It's really difficult to get on cap table because you either need basically at the same time you need like huge amount to invest, or like be really close to company.
Mhm. So XAI, yeah, did you invest in XAI before it got acquired by Elon, or it was before or after acquisition?
Yeah, XAI we invested from our Luxembourg structure also, so it wasn't done from 18 Ventures, but yeah, so through a fund, yeah, who we have really good relationships with, and what else? So yeah, we invested like well before, so it was acquired.
Okay, that's great. That's great. So it was a good exit, I guess, for you.
Well, it's not an exit, yeah. Still, so we believe in the company, and I honestly think that AI space now it's a really competitive one. Maybe it is even a bubble in terms of valuation, but I mean, so here I'm talking not about like base layer like LLM providers, but mostly I'm talking about like end users AI layer. So that's where competition rises.
Yeah, exactly. I see you have already invested in some education startup like EdTech, Udemy, and Coursera also. So please tell me your what was your experience working with EdTech startup?
Well, I would say that such kind of startups were affected by ChatGPT rise, like the most. Yeah. So I don't know, like if somebody now
Yeah, of course.
using these platforms, but we were lucky enough to get out from
Hmm.
Coursera at very good prices. So so we made like 4x on this name.
Hmm.
After they IPO'd.
Good.
With Udemy, we were not so successful because they gone public like literally
Hmm.
when uh, um, when
Hmm.
rate uh, hike occurred, and yeah, so it is not something we could be proud of this investment. So, but I mean, like it is how it is.
Yeah, there is always plus and minus. How do you evaluate potential startups? What key factors do you consider before making an investment?
Well, first thing we're looking at is founders. Of course, the earlier we're getting in, the more influence for the future of the company is, like founders itself. Um, if we're talking about late stage, of course, we're looking about the market. We're looking at the market. We are thinking about competition, uh, potential threats for their, uh, let's say, uh, for their business model, or like potential expansion on the market.
Existence.
Yeah, existence.
Mm.
Um, so yeah, it's pretty common stuff, I would say. So you're just looking at potential of the company, and so that's how you understand like what's the potential valuation. It could be like in a bull case scenario. Then you just started to discount it for all the risks you see. Um, so that's pretty simple stuff, and it's probably the art.
Could you describe your investment strategy, please?
With space tech now, we are focused on upstream startups. So uh, someone who is building something in space, which could be used here down on Earth, or space to space business models. Because like for example, GPS navigation satellites. So they were mostly used here on Earth. Not like mostly, they were used for such startups like Uber Airbnb, like almost everything you
Yeah.
have in your iPhone, use this information from navigation satellites. So where do we invest in? We invest in
Yeah.
companies who build satellites on low Earth orbit, who trying to start generate energy on the orbit. Also, companies who is doing launchers. So such companies like let's see, Firefly Aerospace, like we mentioned before, like SpaceX in my private portfolio. In my public portfolio, I also have Rocket Lab, of course, like what these guys are doing. Also, we invest in companies who is monitoring space weather, and of course, it's like super excited about lunar economy. So it seems far away, but I bet it's not, like in upcoming 5-10 years. So we for sure will see some kind of a business model which will be, like focused solely on the moon. So yeah, and basically almost all of the startups are potentially uh, but potentially monopolies. So at least we hope so. But yeah, we'll see.
Do you prefer early stage investments, ideation phase, pre-series A, Series A, Series B? Which stage you would like to invest in the startups?
Um, we're looking at companies starting from seed uh, until Series B. So after this, yeah, we do not invest. Yeah. At least now. I mean, like, so if if we previously invested in this company, now they're raising like Series B and so on. So we're ready to do follow-ons.
How do you define success in a startup investment? What metrics do you use to measure returns on investment?
Mm, well, so I mean, like we investors, main thing we're looking at is traction, of course. So in space tech, it's a little bit different from AI or fintech. So you're looking at so what contracts from government these companies were able to acquire. So what's the size of this contract? Let's say in upcoming 5 years, potentially 10 years. So what areas they're targeting? But in general, so it end up with the same, like full amount of revenue in upcoming 5 to 10 years, and how much this revenue could potentially cost. What threats for their current position this company does have right now, and yeah, so the ending thing we're looking at is valuation, of course.
Have you ever had to divest from a startup? If so, could you share what led to this decision and how you handled it?
Well, I would say not really. So we exited one startup because they completely pivoted to some other direction. We did not expect them to. So we were initially investing in a company who was building, like hydrogen uh, hydrogen based transportation system. But then they completely switched to like pretty simple defense tech
Mhm.
stuff. That's why we decided to divest, because it was out of our focus. And what else? Yeah, but usually we prefer to, like trying to help founders to succeed, than to, like
Of
divest from
course,
them. So when we see
of
that
course.
they
What role do you play in the startup you invest in? Do you provide guidance, mentorship, or do you prefer a more hands-off approach?
Mostly we prefer hands-off approach, but so I'm always happy to bring more investors to startup. So if we invested in them, so for sure I'm okay to recommend them to anyone else. And the more funding startup has, the more chances to succeed it has. So yeah, it's in my complete interest to, like bring more attention and bring more investors
Yeah.
to such companies we're invested already.
Mhm. Yeah,
So.
that makes sense. Space tech is very high capital intensive industry, and the risks are also very high. Like just see Elon Musk when he was starting up SpaceX, he got three failures when he had no money in the pocket, and he has invested all his money into the three rocket launches, and all got failed. So there is a very capital intensive industry, of course. So
Yeah.
how do you manage risk when investing in space tech startups, a sector known for capital intensiveness and failure rates?
Well, the first question, of course, is so when you invest in space tech startup, you're looking at like what programs are they participating in. So does anyone ready to pay for this product? And when it comes to space tech startups, like initial buyers are usually like either Department of Defense or NASA or Space Force. So it is not like it is not about consumers like commercial buyers at first. So first you're looking at like are they participating like in any programs? uh, did they second step is like did they succeed winning something from them? uh, the third part is like do they have like LOIs, MOUs with some commercial customers? And after this, you're just trying to look forward in the future and understand will there be market for this. So, and of course, technical due diligence, because like there was a company like Spin Launch. They still exist, I believe, but their main idea was to like spin kind of a rocket in kind of a centrifuge and just launch it to the orbit. The problem is not many things can survive, like such amount of G-force.
Yeah,
Yeah.
of
So
course, of course. Physics. The problem is physics.
yeah,
Can you
you cannot
share?
negotiate
Yeah,
with physics, unfortunately.
yeah,
So
100%, 100%, 100%. You cannot negotiate with physics. Can you share a story of a successful investment? And I would also, because you have invested in so many companies, so many startups. You often may be thinking, okay, I have invested in so much startups. So you often just ponder upon what the startup which give you the best returns. What was the thing you have done differently in that investment, or like from the others one, which give you the best success?
mm, I would say one of our first investments, it was a company called Diamond Foundry, and initially they were just like producing artificial diamonds, but also at the time we invested, so there were um, like kind of an opportunity, potential opportunity, that they would start to produce, like diamond-based wafers for microchips, which at the time of our investment was, like very far away story. And now, like a year ago, they just set up a factory in Spain, so where they literally produce these wafers, and they have huge demand for this, and a lot of stuff, like had to happen um, to for this company and like for the whole economy, like so the demand for these wafers would skyrocket. And so so yeah, that was probably the reason that that return on investment is like maybe 6x
Wow.
right now. And so the reason for this is because it was really unexpected that ChatGPT will arise, like demand for AI chips will arise. So, and at the end of the day, this diamond wafers will be in such a need for chip production.
Wow.
So, yeah. Um, so I would say that you're making like like a bet, and if it's obvious, um, so you probably will not get like high returns on
Hmm.
this bet. If it's not so obvious, so that's where you can expect like to triple or maybe make it 10x. So another great deal we just did basically. So it was like super fast. So we invested in a company called 1X Technologies. That's a humanoid robot production company. So and so we invested at like 1 billion valuation in the beginning of the year. So and so now they just announced that they're going to raise like a
Wow,
10 billion
10x
valuation.
already.
And the reason for this, yeah. So here it was thanks to like I would say. Um, so our way of thinking was that if Figure AI was able to raise it, like 40 billion, and those guys have let's let's be honest, like better technology, and they're closer to mass production than Figure AI, and now they're like worth 1 billion. So why not invest? So it's an obvious arbitrage
Yeah.
valuation. So that's what we did it, and it ended up really well. And Another great company we were lucky enough to invest in is a company called Q
Mhm.
Control, and those guys may be doing, I would say, first real world application of not first real world application. Of course, they were before, but they do real world application of quantum effects. They so so when the uh, when during the flight the plane lost GPS signal, for example, if they use the product of Q Control, so you still can um, like with 100% accuracy know where the plane is. So it's basically adding up to GPS navigation in the places where it's like
Mhm.
almost impossible to have signal. Yeah, and they're doing really great. So we invested at like 250 million now. Um, now they're going to raise like substantially higher valuation. I just cannot tell at what valuation, but yeah, you'll see.
Of course, of course. Is it using inertial navigation system to have like on the base of GPS and then add inertial navigation? And because to some extent we can go with INS.
Inertial navigation is kind of trying to predict where the object
Mhm.
is based on his previous
Yeah.
movement pattern. And this thing, it's basically quantum sensing technology, which gives you like exact location,
Oh,
and it gives you this location thanks to quantum effects. Yeah, so that's what's brilliant in this technology. Yeah,
wow. I love space tech and I also follow these things quite a lot. I will check it out how they are doing it. It's indeed amazing thing.
yeah.
How do you manage your portfolio? Do you have a set number of investments you like to maintain at any given time, or it just depends on what opportunities are out there?
Well, so before we actually invested on a deal by deal basis. So we were just like looking for exceptional opportunities and then just getting for it. So and now, so in Hypernova Fund, we're gonna have like up to 20 startups, which we will like invest in, do follow-ons later on, and provide like all support we can provide. So with all the network, with all the connections, and like expertise we have. So yeah, it's gonna be different now. So before it was like a deal by deal.
What advice would you give to entrepreneurs seeking investment for their startups?
Well, first of all, I would say just to make some research who you're texting to. Is this person really interested in industry you are working in?
100%.
Uh, yeah, because I mean, like 90% of emails So
Yeah.
they start with something like, "Are you guys investing? Here's my startup." Well, yeah, we're investing, but what
Here's
does
my
it have in
startup.
common with your startup, bro? So
Not in everything.
yeah,
Yeah.
yeah. I mean, like, so
Chill,
the best
chill
way,
out.
yeah. So
100%.
so in my opinion, it's much. I mean, like, we're also fundraising. So entrepreneurs fundraising. So we're as a fund also fundraising. So it's much easier to make some preliminary research and to find some maybe warmer connection between you and person you are trying to reach out to, than to do it just, like a cold calling. So just send a random email and hoping for the best. So there is no point to do so. So with 90, maybe even 99% probability, your email will be
Yeah.
at
Yeah.
best opened, but not read. So that's it.
Yeah,
So
that's 100% true. I also often get so many requests, so many messages on my DMs, and it's so true that people don't do research. People don't see even read the LinkedIn profile and see what they are doing and what they're investing in. So founders, please, please, please. Just read what the VC fund is investing in, what is their previous investments, and if you can find some warmer connection, that would be 90% give you guarantee that you will be heard. But if you will not have any warmer connection, you don't read their messages, that's not going to help you. So yeah, that's 100% very very valuable advice. Just go and find some warmer connection and find someone you know, and then they can connect with that VC or angel investor or whoever you are trying to reach. But do some research. Do some. I mean, just sending up cold calls or cold emails, cold messages will not work 99% time. And if you want to have your success rate 90%, up to 90% read and reply, then find the warmer connection and they will connect you, introduce you, and then you will definitely get heard, and maybe you will end up doing much less effort to raise your funds than what you're doing right now.
yeah, that's true. And also, in LinkedIn, it's like so popular now to use this, not an agentic AI. Yeah, so just this uh, tools which randomly text you, and then like after the third message, it's just asks you like, "Did I do something wrong?" Yeah, man. So you purchased this tool. It's like,
Of course.
ask your money back. So
Yeah, 100%. Yeah, yeah. Yeah, I see there are like so many these tool makers are just sending, oh, you can send so many thousands of messages and you can automate this outreach to the investors. I even see this like there are a couple of startups based in YC and Y Combinator and Silicon Valley. They are making these tools, but I really have big doubts about their success, because I think this is not how investment ecosystem works. They work with warm introductions, warm leads, and one investor will send the lead to the other one, and then even they are not investing, they will maybe connect you to someone if you know them personally and in a warmer connection.
sure. I mean, like best deals, they just, like a precious gold. So they moved from one investor to another investor. So you see, like, that's a cool idea. So do you want to look at this? So do you want to invest? So that's how best deals usually circulate among, like, VC community.
And usually
So
they stay inside the circle unless the deal is closed.
yeah,
Bec- yeah,
yeah,
because
yeah, yeah, yeah.
they
That's
want to
very
keep
true.
it hidden so nobody else will interfere and jack up the valuation.
Yeah, 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 yeah. one
Yeah.
hundred percent. Best deals stay in inner circle always.
Have you ever invested in a startup founded by someone you mentored and advised, or and then how did that relationship impact your investment decision?
Um, So we invested in startup of, well, it was different. Yeah. So basically, we invested in a startup of a friend of mine. So they gone public on New York Stock Exchange right now. But it was, like, it's a small startup. Now they worth, so they IPO'd at 150 million, and we invested at like 30 million, I would say. But mhm. But I mean, like we only gave several advices how to do it right. Like how to fundraise, how to structure rounds, and several advices on term sheet. Um, if we ever acted as a venture builder, so I would say no. So it's not our bread and butter. Yeah. So we prefer um, to get recommendations on some startups, then talk to founders, and after this make a decision like to invest in or no. So that's how we usually work.
Okay, great. What key qualities do you look for in a founding team when considering an investment?
Vision, for sure, the first thing. So ability to sell and well, don't get me wrong, ability to storytell, and as a consequence of it, to sell. Because founder is always selling to everyone,
100%.
right? So he's selling to his team, he's selling to his customers, he's selling to everyone basically, and even to himself
Of
during
course.
hard times. So some kind of some kind of courage, so that's what we're looking at. But at the same time, a flexibility. So because you never know what the startup which product the startup will end up with. So you can invest in one thing and then it could succeed with completely
Yeah.
different stuff, and it's okay. So the earlier you invest, the more important it's like who you invest in. It's like not what you invest in.
Yeah, yeah. I think if founding team have the good vision and they are, of course, a good salesman, that's a perfect combination you need. And then they will manage to do anything out of that startup because often you have to pivot also. So yeah,
Yeah, Ev- every hill it needed
yeah,
Packard. Yeah. So
100%, 100%, 100%. Just like Steve Jobs, like Wozniak and Steve Jobs. Steve Jobs was a good salesperson, and Wozniak was, I think, good at tech. So you need these two combination either in one person
for
or
sure.
two-person. What is the biggest challenge you face as an investor in startups, and how do you overcome it?
Well, basically, I think it relates not only to investors or investment in startups. I think we're facing the same challenge. Everyone's like huge amount of information, and just how to like separate what you really need of noise surrounding us. So I would say that's the most complicated part, especially when you receive like hundreds of decks a week. Um, and how do we overcome this? Well, I prefer to source deals from like from the network, from inner network. So just to receive it by recommendation,
Mhm,
uh, and that's it.
mhm.
I would formulate this answer like that.
Do you think I see there are some VCs who are also like let the people send them pitch decks or stuff, even if they are not warm connected.
I think I think it depends on approach and on the industry you are working in and you're investing in. So, in my understanding, if, for example, you invest in AI, so filtering startups and like looking at various like demo days, pitch days, and accepting like infinite amount of pitch decks could work. If you and like you're
Oh
making
no,
this
yeah,
just filter, and yes, and then like it's more or less like classical spray and pray
yeah.
after you make some not like spray and pray. So of course now everyone is getting smarter, and so you're just not writing checks, so you're always talking to founders, you're always trying to make some like research with chat gpt or something else, like get some references from the community, of course, and only then invest. But still, like it's like more or less close to what I just mentioned. And if you, for example, invest in deep tech, so there is no point to accept like every pitch deck, because there are a lot of stuff which people just, like they're just fantasizing. So and this maybe has nothing to do with physics, or like with right approach. So probably they were never, like in agencies like NASA or Space Force or something else, and they just do not know how to do the business. And um, if you're investing in this sector, so you for sure need to use, like a very small network of people who know
Yeah.
what they're doing, so who can
Yeah.
give you
Yeah.
an advice, who can reference you proper startup, so and proper people. So that's kind of a different
Yeah.
approaches. So AI startup, you can set up in a day, right? So of course it differs. I mean, like, so how successful it will
Yeah.
be. So for example, if somebody from OpenAI core team set up a startup, so that's a different thing. That, for example, me will set up an AI startup, so using
Yeah. Yeah.
basic tools. With space tech, it's almost impossible. You need to have a background. You need to have like experience in the field. Um, Same with biotech. So it depends on industry. Yeah, you're investing in. So the short answer.
Yeah, 100%. I also see that Y Combinator is like too much, like taking too many applications, and there are like, I think one batch has hundreds of startups and companies. I think their model is more spray and pray than like really investing in some very cool or like outliers. I think there may be more like, okay, they, because over the period of time, like they are into this VC space or investment space, maybe they are best, they only work on probabilities. So if they will invest in 100 good startups, we have chances of 10% successes. It's just like trading, finding the best trade. What is your risk to reward ratio?
I mean, several days ago, I had a conversation with another fund, and so we were discussing like what impact does participation in YC Combinator does this participation has for a
Hmm.
startup, right? So and to be honest, like statistically, this impact is so how meaningful it is.
Yeah.
It's decreasing
Hmm.
slightly, and apparently the answer why um, is, so initially YC, so it accumulated all this knowledge, provided it to all startups which were chosen for acceleration. Um, but now it's like more and more difficult to find, this unique
Hmm.
part of knowledge which can affect your success as a startup. So it's all
Yeah.
common knowledge now.
Yeah. Yeah.
So
Yeah.
they
Yeah.
have a YouTube channel. They have
Yeah. Yeah.
everything, like
Yeah. Yeah.
publicly
Yeah.
available.
Yeah.
And to find this one precious grain which will affect success of startup, it's getting like more and more difficult. So that's why the results of Y Combinator startups, they like, getting closer to, average.
I mean, we should still give them credit because Y Combinator was the first accelerator which was giving all the information on publicly and just spreading it. That was really a
Sure.
big credit for them. Like they didn't keep it close and they didn't hide it. They were telling everybody, okay, if you don't get selected in Y Combinator, use our tools and build your company, and they make it democratized and more open and more in free, and so a
For
big
sure.
shout out for them.
That they made a great job. I mean, like, so they basically cannibalized their advantage to provide this precious knowledge to all of the world, instead of using it in a,
Yeah,
like
100%.
small room of small acceleration
Yeah,
room, let's say.
100%. I used to also hear Y Combinator, their talks and discussions. And I remember, I think Sam Altman, when he was not so famous of OpenAI, before that, he was just like in Y Combinator and just helping the startups. So, and he was just wearing these small shorts and coming and talking to the startups. So I used to hear them. So they were like Sam also himself said that, okay, even if we will give all the steps of the building a company in a written way, and we say give it to the founders, and we say, okay, run the company or execute it, and then you will have $1 billion unicorn. Even then, nobody will do it because execution is the key to success. So it's idea matters,
For
of
sure.
course. All the investment, all these things matter a bit, but execution and the sales skills make you distinguish from a successful startup to the non-successful or unsuccessful startup. And I think we cannot even say that, okay, this idea works very well, or maybe there was another idea which was not executed correctly, or the founders did some big mistakes, and that could have much higher success than this particular idea. But so execution really matters a lot, in my opinion. And of course sales.
Yeah, well, for sure. For sure. I mean, like, so every a lot of companies were trying to build an electric car before Elon, right? So yeah, but it's all about execution. Yeah. But now, so there are some other companies, especially from China, who is even better at execution. So
So the for Tesla, I would say, okay, this Tesla was not Elon companies. Elon bought it from another person who started it before, and it was not, of course, working at that time. But so Elon give the name. So the brand name brings so much value, and then everybody was in, so the branding is, I think, a successful founder branding is very key. Also, if you get some startup and you get somebody on board who has already done some big successes, you definitely go somewhere. But I totally agree. Now Chinese are executing much faster, and there are us. I was talking to someone who was from China, and she was telling me that there is maybe 50 to 100 brands of car manufacturers. I don't know all were EVs or not, but there were so many brands, car manufacturer, who were starting up in the China, that the Chinese government have asked them to shut down the companies. They cut their loans or whatever. They hike the interest rate or whatever. How they make them close the companies, because there was so much competition between these car manufacturers that they have to shut down many of them, and they are targeting to have as low as little brands as possible for the car manufacturing. And now I see some of the brands have so nice cars which can really compete Tesla. But of course they don't have Elon. So Elon value is also very big,
yeah,
play a very big part in the Tesla shares. Um, are there any misconception about startup investing you would like to clarify?
I wouldn't say there are like some misconceptions. I think it's more or less simple. Yes. So um, how I approach this, yes. So there is an idea. There is some execution team. Yeah. So who is about to start building this company, and how do investors usually look at it? So maybe that's going to be like a tip um, for startup founders. So try to look from VC perspective, from investors perspective, not from your own. Yeah, like so. Well, what investors looking for is like a great story, great idea. So which we will be happy to tell other VCs, yeah, to participate in. So basically, so that and to build this storytell and this idea. Um, you um, not like this. So I would
No.
rephrase. So we will stay with this part that we are looking for great ideas to share. But how do we evaluate the company? Yes. So should we invest in there or no? So let's say founders succeeded with everything they told. So how much will it cost in this occasion? So let's say 10 billion. Then you just starting to to what's the right word for this? To discount it with the risks, with what could potentially go wrong, right? So and that's how we end up from, let's say, from 10 billion to maybe like 20 million. And it's like really important not to increase valuation of the company too fast, and to move like step by step. Because, for example, the for me, the thing which happened, for example, with Figuerea, where they like raised up their valuation to 40 billion. Um, but to be honest, for those one who invested at 40 billion, so I do not understand like what this company should do to have like at least like 2x markup to their like next round valuation, uh, so to worth like 80 billion. So it's difficult. In my opinion, they should raise it like 10 billion, maybe like as a maximum at the current stage. But yeah, not to exaggerate expectations. Yeah.
100%. I often see there is like some critics about VC industries. Like they say, founders often complain that VCs are looking for so low valuation. They don't want to uh, don't want us to tell higher valuation to them. So, I mean, is it like true? And they say, okay, angels are much easier for us to have go for higher valuations, and then we increase the valuation. Angels invest, but of course, angels invest in smaller check sizes than VCs. So maybe VC has more power for the cash liquidity. That's why they ask for better conditions and better value, less lower valuations.
Well, fund managers, of course, looking for better conditions always. That's kind of a conflict of interest. But at the same time, so if there is enough room to make everyone happy, so let's say, so I bet VCs would prefer to pay a little bit more than to completely walk out from a deal. So of course, angel investors more have less negotiable power, let's say, but also again on who is investing. So, for example, if I don't know, Peter Thiel is acting as an angel investor, so that's like completely
Yeah,
different.
completely different, of
If,
course.
for example, yeah, I will write this check. So yeah, uh, because he's adding like his name to this money for sure, and the startup can like raise at substantially higher valuation later.
Yeah, yeah.
So yeah, it's all the question of negotiations for sure.
Yeah, of course. You are raising now investment. So what you say for the LPs? How much you are raising? How much you have already raised? And of course, you are going to invest in startups, space startups. So what's if you have some message for LPs?
Well, we currently raising 50 million fund. So first closing will be like at 20 million. So far we have commitments for 12. And but at the same time, so we already like investing in startups on a deal by deal basis right now. So and um, yeah, and I think it's like completely right timing to invest in space tech right now. Yeah, because like I said previously, so that's so many new industries and sub industries arising in space tech field. And this space race, which now happening between United States and China. So in some areas, United States losing this race. In some areas, they advancing like super fast. Let's say with launchers, yeah. So Starship is like 10 years ahead at least. Uh, but what we could say for sure that space domain is something which will be heavily funded in upcoming several years. because you just you just cannot have any other like choice. um, so you cannot just walk away from investing in space, because if your rivals would have space, like space technology, like well advanced, and you will
Dominance.
not. So it's like fighting, yeah, fighting with tanks from aviation. So yeah, makes no sense. um, yeah. So if so if talking about message, so if you did not consider investing in SpaceX, this is the right
And
time.
right
So
company and right
for
venture
sure.
fund to invest in.
Yeah, sure.
Um, I often see that the VCs and LPs are just rushing towards the same domain. Let's say before, I think AI is going to be finished now. AI season, I would say, and now, as you say, now mostly it's going towards space direction and more defense tech and this kind of, because of there were so much regional conflicts happening around the world. Um, do you think it's always advisable to follow the trend, or just follow the approach like Peter Thiel say, from 0 to 1, investing in some outliers without targeting in one particular domain and just looking, because often like Peter Thiel give example like often people are like, if there's one door, everybody's rushing towards that door and investing in those companies, or putting in the other door which is much bigger and have no competition and it's wide open. Nobody's going to that direction.
Well, of course, it depends on um, um, each particular person psychic type. Um, for me, it's much easier to invest in outliers and follow the rules of Peter Thiel than like trying to rush in with thousands of AI companies and trying to pick the successful ones. Um, but of course, when I'm looking at, let's say, Perplexity, which which I saw at which I saw at very early stage, and now they're worth like 20 billion. Of course, I feel some kind of FOMA
Missing out.
feeling.
Former
Yeah,
feeling.
um,
But now it's too
but
late, I guess.
yeah, well, I guess so too.
Mm,
I mean, so it is not like AI is a bubble in general. Of course, no. But I bet there are a lot of companies which are, you know, which are bubble right now. So that's why we
I
decided to
agree.
invest only in basic layer companies like XAI, Anthropic, OpenAI, Crusoe. So something which provide, let's say, infrastructure. So yeah, kicks and shovels.
Uh,
I mean, nothing new. So
yeah, yeah. You also invested in OpenAI?
well, technically OpenAI was skipped, Anthropic and XAI, and company called Cohere also.
Coherence.
Cohere,
Okay.
they also
And
do LLM models, but they're based in Canada. So
yeah, and Anthropic. So you still invested in models like Anthropic.
we are not adding anything. So we invested like last year, and that's it. So we're just
Okay.
looking at it right now. So
So okay, you didn't invest in upfront like in the seed stage. So it was quite late, I guess, last year even.
yeah, yeah, yeah,
Yeah.
kind of.
What's your like any concluding remarks or anything you would like to say to founders or LPs or any messages for VCs?
Founders, I mean, like, so I, I I respect them. I mean, like, so I like what they're doing. So their main, like engine for progress. Yeah. So um, I would recommend them just um, to try and to use like investors' perspective. So just to understand like what investor is looking for, and it will make things much more easier than trying to upgrading your pitch deck according to some, I don't know, like recommendations. Yeah, just simple talk and trying to find right connections and introductions. Yeah, it will make much more good for the company than anything else. And to LPs, well, I mean, like LPs of the funds, they're already risk takers. Maybe I would say some kind of advice to other people who did not invest in VC deals, that we always taking risks. Now when the world is changing so fast, maybe it makes much more sense to invest in technological startups, though they look like much more risky than, for example, treasuries or something else. But you know, uh, still, this stuff have to be in your portfolio. Yeah. So that's it.
Yeah, 100%. And now treasuries are also, I think, going to be stressed out because now the interest rates are, Fed is cutting the interest rates. And of course, treasuries are less risky, but we see then startup investment is high, little bit higher risk, but again, it has higher return also. So it, as we say, high risk, high returns, low risk, low returns. So
Nothing changes.
uh,
Yeah.
nothing changes. So it was pleasure.
Yeah.
It was lovely talking to you, Grigori. Thanks a lot for coming and giving your super great advices to founders, LPs, and VCs. It was lovely talking to you, and thanks for joining the Unicorn
Thank you so
Show.
much, Fahad. Thanks for having me.